There is a specific kind of financial frustration that belongs almost exclusively to people who are starting from zero with credit. And it is different from the frustration of debt, or the frustration of insufficient income, or the frustration of market volatility. It is the frustration of time, of understanding intellectually that you are doing the right things, paying on time, keeping balances low, managing the account correctly and still having to wait, still watching a credit score that moves in increments of 2 and 3 points per month when you want it to move in increments of 20 and 30, still getting told by lenders that your credit history is too thin, your average account age too short, your profile too new to qualify for the products you actually want. Credit building from zero is slow by design. The scoring models reward time because time is the variable that is hardest to fake. Anyone can make 3 months of on-time payments. Not everyone can make 36 months of on-time payments. The credit score is, among other things, a measure of demonstrated consistency over time. And demonstrated consistency over time requires time that cannot be manufactured, accelerated, or substituted with any amount of financial sophistication or good intention. Welcome to Klux One Finance. Let us get into it. Before we get into the strategies, let us understand exactly why credit building feels so slow for most people, so we can address the root causes rather than just prescribing tools without context. The feeling of slowness comes from 2 sources. The first is the nature of the scoring factors themselves. Payment history, which is 35% of your score, requires months of on-time payments to build into a meaningful positive pattern. A single month of perfect payment behavior is better than no months, but it is not dramatically better. The scoring model is looking for a pattern, not an event, and patterns take time to establish. Average age of accounts, which contributes to the 15% length of credit history factor, literally requires the passage of time in a way that nothing else in the scoring formula does. You cannot increase your average account age by paying more, by spending more carefully, or by doing anything other than waiting. Each month that passes adds 1 month to the age of each account, and the average account age grows accordingly. There is no shortcut. There is no tool or strategy that adds time to your accounts without time actually passing. The second source of the slow feeling is that most people building credit from scratch are using only one strategy, typically a secured credit card opened at a bank, and receiving only the gradual credit building benefit of that single tool. One account aging slowly. One account's payment history building gradually. No other positive factors being added to the profile. The result is progress that feels imperceptibly slow because it is, relative to what is possible when multiple strategies are running simultaneously. The solution is stacking. Running multiple credit building strategies at the same time, each one contributing to a different aspect of the credit profile simultaneously, so that the total credit building momentum is the sum of all strategies rather than the contribution of any single one. Let us build that stack. Strategy number 1 is becoming an authorized user on someone else's credit card account. And I am listing it first because it is the only strategy that can add established credit history to your profile immediately rather than building it from scratch going forward. When a person with an existing credit card account in excellent standing adds you as an authorized user, the full history of that account, its age, its credit limit, its payment record can appear on your credit report. If they have held the card for 8 years with perfect payment history and a low utilization rate, you may suddenly have an 8-year-old account with a spotless record contributing to your credit profile without having had any personal involvement with that account for those 8 years. Strategy number 2 is the secured credit card, and we covered this in detail in the previous video on cards for people with no credit history. In the context of this accelerated credit building stack, the secured card serves 2 specific functions. It provides your first account with your own payment history being built, not borrowed from someone else's account, as with the authorized user strategy, but genuinely yours, demonstrating your personal credit behavior to the bureaus. And it provides a foundation for your utilization management, which is one of the fastest moving factors in your credit score. For the credit building stack we are building today, strategy number 3 is the credit builder loan. And this strategy is often overlooked in credit building discussions because it is less familiar than credit cards and requires finding the right institution to offer it. But for building credit from scratch, the credit builder loan adds something that a credit card alone cannot efficiently provide: an installment loan account in your credit mix. Credit mix, which accounts for 10% of your FICO score, reflects the variety of credit types in your profile. Lenders want to see that you can manage different types of credit, responsibly revolving credit like credit cards, and installment credit like loans with fixed monthly payments over a defined term. A credit profile that shows only credit card accounts is missing the installment loan component of the ideal credit mix, which means it is leaving 10% of the scoring formula under-optimized. A credit builder loan is specifically designed to add this installment credit component for people who do not yet qualify for traditional loans. Here is how it works. You apply for a credit builder loan at a credit union, a community bank, or an online lender like formerly Self-Lender that specializes in this product. The lender approves you for a loan amount, typically between $500 and $2,000, but instead of giving you the money up front, they hold it in a secured savings account. You make fixed monthly payments typically between $25 and $150, depending on the loan size and term over the loan period, usually 12 to 24 months. Each payment is reported to the credit bureaus as an on-time installment loan payment. At the end of the term, the loan is paid off, and the funds held in the savings account are released to you, minus any fees charged by the lender. The credit building mechanism is the monthly payment reporting. Each on-time payment adds a positive installment payment to your credit report, building the payment history that the scoring models reward. By the end of a 12-month credit builder loan, you have 12 months of installment loan payment history on your credit report. You have added a new credit account type to your mix, and you have the loan proceeds available either to bolster your emergency fund or to make a larger deposit into your secured credit card for a higher credit limit. The cost of a credit builder loan is the fees and interest charged over the term. On a self-credit builder loan, for example, the interest and fees over a 12-month term on a smaller loan amount might total $30 to $60, a relatively modest cost for the credit building benefit received. Strategy number 4 is Experian Boost, and it represents a category of credit building tool that did not exist until relatively recently. Tools that add non-traditional payment history to your credit report that the bureaus would not have included in the past. Experian Boost allows you to connect your bank account to Experian and grant permission for the bureau to scan your transaction history for utility payments, phone bill payments, streaming service payments, and rent payments that you have been making consistently. Qualifying payments that are found get added to your Experian credit report as positive payment history, which can boost your Experian FICO score immediately upon inclusion. The impact varies significantly by individual. People with thin credit files who have been consistently paying utility and phone bills for years can see meaningful score boosts, 10 to 20 points in some cases, simply from adding existing payment history that the bureau was not previously seeing. People who already have thick credit files with extensive card and loan history may see smaller impacts because the marginal value of additional payment history is lower when significant payment history already exists. For someone building credit from scratch who has been paying bills reliably but had no credit accounts, Experian Boost can add positive payment history to their report immediately without opening any new account or waiting for months of new payment history to accumulate. The limitations are worth noting. Experian Boost only affects your Experian credit report and the scores calculated from it. Equifax and TransUnion scores are not affected by Experian Boost additions. Additionally, the boosted payments can be removed from your report if you disconnect your bank account from Experian, and the score boost is reversed when the payments are removed. The strategy works best as a permanent addition maintained over time rather than a temporary boost applied and then removed. And the bank account connection required for Experian Boost does involve giving Experian read-only access to your transaction history to scan for qualifying payments, which some people are uncomfortable with. The decision to use Experian Boost should be made with full awareness of the data access involved. For rent specifically, several services beyond Experian Boost allow rent payment history to be reported to credit bureaus, including Rental Karma, Rent Track, and Rent Reporters. Rent is often the largest monthly payment in a young person's budget and historically has been invisible to the credit bureaus entirely. Adding consistent on-time rent payment history to your credit report can be particularly impactful for someone who has been renting and paying reliably for several years but has little other credit history. The services typically charge a small monthly or annual fee for the reporting service, and the benefit varies by which bureaus receive the reported data and how the specific bureaus weight rent payment history in their scoring models. Now let us talk about the power of running all four strategies simultaneously, because the credit-building impact of the full stack is not simply additive, it is synergistic in ways that produce outcomes faster than any individual strategy could generate alone. When you are an authorized user on an established account, your profile immediately shows account age and payment history that it otherwise would not have. This head start means the other strategies you add are building on a base that already has some substance rather than starting from absolute zero, which produces faster score development in the early months. When you add a secured card on top of the authorized user account, you now have two accounts contributing to your profile, one established and one new, with both showing positive payment behavior. Your utilization is being managed across two accounts. Your payment history is being built from two sources. The scoring model sees more to work with and responds more quickly. When you add a credit builder loan, you have introduced an installment loan account to a profile that already has revolving credit accounts, which begins satisfying the credit mix factor and adds a third monthly payment to your positive payment history building. When you add Experian Boost and rent reporting on top of that, you are adding additional payment history sources that supplement the primary accounts, creating a profile that shows consistent payment behavior across multiple obligation types: credit cards, installment loans, utilities, phone, rent, which paints a comprehensive and positive picture of your financial behavior for any scoring model evaluating your report. The combined effect of all four strategies running together can produce meaningful score development within the first 60 to 90 days that no single strategy achieves alone in that time frame. The month-by-month timeline for someone running the full stack looks like this. In month 1, the authorized user account appears on your report, often producing an immediate score generation for someone who was previously unscored or a meaningful score increase for someone who had a thin file that temporarily suppressed the score you are trying to build. For the credit building stack, the application should be spaced deliberately: the secured card first, the credit builder loan after 2 to 3 months. Any additional new accounts separated by at least 6 months from the previous application. Missing a payment on any account during the building phase has a disproportionately large negative impact on a thin profile where each positive entry is doing more work relative to the limited total history available. Closing any account prematurely, especially the secured card, before graduation removes account age and available credit limit that the profile needs. And letting utilization climb above 30% on the secured card undermines the utilization management benefit that is one of the fastest score improvement levers available. Building credit from zero is genuinely a project of months and years, not days and weeks. But the full stack approach compresses the timeline meaningfully compared to the single strategy approach that most people default to. The authorized user strategy borrows established history that would otherwise take years to build organically. The secured card and credit builder loan add genuine personal history across multiple account types simultaneously. The boost and reporting tools capture payment history that has been invisible to the bureaus despite demonstrating consistent financial responsibility. Run all four together, manage each one correctly, avoid the specific mistakes that slow progress. And the credit profile you build over the next 12 to 18 months will be a genuine financial asset that opens doors and reduces costs across every major financial decision you make for decades to come. Subscribe to Clux One Finance if you have not already. Hit the bell notification. Share this with someone who is trying to build credit and feeling like it is taking forever. And I will see you in the next one.